Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's time for Luminar earnings. So let me just give all my members watching on Extra the link now to join me live. So here is the link. You can stay where you are, watch behind the scenes. You can do whatever you like. It's up to you where you watch. It makes no difference. Or if you're a Lucasade, you'll have them both open. What the hell? Double prizes. You can have me in stereo, front and behind, the whole bloody works. All right, that's the best way to go. Stay in both channels. Yes, do that. I recommend that. All right, here we go. We got Vaz. Hey up, banana heads. Here he is. Vaz, how are you? This was booked tonight by Jay Long. Jay Long, I hope Jay Long is here. Jay, is Jay Long here? Because Jay Long asked for this earnings tonight. So Jay is not in the main channel. Is Jay in the extra channel? Let's have a look. No, I don't see him. But Jay Long, this was booked for you. Oh, hey everyone, Jay Long, this is your review. Thank you, your earnings. Thank you very much for being a member. And thank you very much for booking it in, $5 super chat, so we could prioritize this and choose this one above all others. So thank you very much indeed for being here. Thank you so much for that. Okay, so we are waiting now for Luminar's earnings. We have got 29 minutes before it starts. It is a Zoom call tonight, so we'll be listening in to Zoom tonight. That's what we're going to do, so stand by for that. Who's here? So what earnings are we doing tonight? Couldn't find it anywhere. Yeah, I know. It's only on TikTok, X, Instagram, Facebook page, Facebook group, Discord, Rumble, YouTube, Threads. It's got videos. It's got shorts. It's got posts. It's got promo videos and a live show. And it's even promoted on the other channel, telling you about it on this channel. So I think we've done our best. If you've not seen it, then you've been living under a rock, and then that's your fault. I cannot be responsible. I cannot be held responsible for people living under rocks. That's your own bloody lookout. Anyway, so there we go. Hey everyone, Jay Long, here he is. Is the market rebounding? Slowly it is. It's going to take a while. I think we'll go sideways for a while. That don't matter. I'm here. I'm here. That's all right then. As long as you're here, Mike, the show can continue. I'm here. Yes, I got it. Everyone's here. All right, I got it. Vu went right back down again. No, it didn't. Why are you saying that? Why are you saying it went right back down again? How did it go right back down again? I'm up 2%. Am I up 4%, 5%? No, but I'm up 2%. What's wrong with that? In one day, I've made $1,400. That's fine. We're going to go sideways for a while. We're going to get little bounces for a while. Doesn't matter. Patience. Patience is the name of the game. No one's got any patience, have they? They want to make, I mean, obviously it's percentages. If you've got $1 billion in the S&P, you can get rich in one day, right? But, you know, you're buying the S&P, it's an investment program. It's a steady as she goes, constant growth, steady as, patience. If you want to get rich in 5 minutes, this isn't the show for you. You want to go and watch a crypto channel which tells you to buy Binky Bonk. Some of you will get rich. 99% of you will lose all your money, but somebody will. This isn't the channel for you. This channel is to try to help you go steady, slow down, make money, long time, and don't lose any money. Don't pay taxes. Don't lose out. That's what this channel's for. If you've come for a quick buck, this isn't the place. I suggest bank robbery. Bank robbery would be the way to go. That would be the way to go. Guaranteed. Guaranteed. Go and do that. You'll be rich in 3 seconds. Just walk into a bank and go, give me your money. Done. You're rich. Easy. You probably go to prison for a while, but you'll be rich for a few minutes. I would do that. That's the way to go. Right. I won't ruin your show again, Martyn. Yeah, it'd be nice Mike, but I know you. I expect you to ruin it again in 5 minutes. Good afternoon, everyone. Went from 480 right back to 470. Where we were this morning. No, it hasn't. Look at my portfolio. What are you talking about? Look, I'm up 2.2. I've only got the S&P. So it can't have possibly gone where we were this morning. It's still up 2.2. Where did I get the 2.2 from? Space? Where did it like thin air? Where did that come from? It's right there. You're looking at it. If we look at my Roth IRA, in fact, I've got it set now for Luminar, so we're not going to mess around. Let's keep it on Luminar. I think we can all agree the S&P's gone up today. If you bought too high and then it went down, then yeah. But if you bought when I bought during the night when I went live and told everybody, then you're up. You're up quite a lot. If you bought at the top of the tree today, at the bounce, then no, you're down. Of course you are. Hi, Stephen. I'm going to start making more videos. That makes sense. I would. Yeah, I would get rid of the old snake thing. It's about, really. It's about time you moved on from that. Robin had posted the earnings. Robin Hood earnings. Let's have a little look. I can't cover every bloody thing. Could have covered Robin Hood tonight as well. Someone did a super chat, but no one did. They couldn't be bothered. No, hang on a minute. That's August 7th. August 7th. You're on about tomorrow. They haven't posted the earnings. Jay Long, Robin Hood posted the earnings, down 0.18. It's not available until tomorrow after hours. How could you possibly know what the earnings is for Robin Hood? What's going on here? Look, it doesn't come out until tomorrow night. And Jay Long, he's saying Robin Hood have posted the earnings, down 18 cents. How the hell's that possible? Doesn't even come out till tomorrow. Luminar earnings. Now we're talking. All right. Okay, you're trying to confuse me. Is that what you're trying to do? You're trying to confuse me? Let's have a look. Right, bloody hell. See what I got to put up with? They were expecting to make 19 cents loss. They're making 18 cents loss. So it's a beat. A consistent rise, a consistent beat. Very, very nice. Luminar earnings. We like it. Moving in the right direction. Moving up. Moving on up. Moving on up. Yep. They are still not making any money. They are still cash negative, but they are consistently. That's a very nice trend, that. Consistently, other than once there. They didn't do it a couple of years ago, a year or so ago, but we're moving up. The bottom line at the end of the day is moving up. That's good. And top line, of course. But yeah, we're moving on up. I like it. Jay Long, thank you very much. Bloody Robin Hood. Thanks, James. Sorry, it's okay. Don't worry. You'll be like Mike in a minute, ruining my videos. Don't ruin the videos. That's my tip to you. Don't ruin the videos. I didn't know it started. How did you not know it started? Here I am, live every day, same place. You get notified if you click the bell and ring the notification thing. If you refresh the screen, if you look for the live button, it says you're live. Can't go wrong. I'm at 3% as well. Follow Martyn. There you go. 3%. Apparently, so God named a farmer, said, I'm right back where I started from with the S&P. I don't know what S&P you're buying. Maybe you're buying steak and peas. Steak and peas is a great stock. Steak and peas. When is earnings? Earnings is in a minute. We're live. We're live for it. We're here. We're waiting for it. Waiting for a Zoom call. We're zooming tonight. We're zooming. Right, here we go. Let's zoom. Let's talking about zoom in. Let's zoom in. Right, Luminar earnings. We're looking right at it right now. There's a chart. Looking right at it. There's the information. You can see they beat on earnings. They beat earnings. It's very good. Very happy. Well done, you. Give you a round of applause. Still losing money, but we're moving on up. Okay, that's very good. It's only a slight beat, but it's a beat nevertheless. Actually, it's quite a good beat, if I'm honest. Okay, we're waiting for the Zoom call to begin. Can I, no, I don't need that. I shall leave that there. I shall leave that right where it is. I could rob a bank in Minneapolis with Kamala Harris. That guy has let his city burn down from... Yeah, I would just do that. If you're fed up with the S&P, this show ain't for you. You want to go and rob a bank. Let me know how you get on. Send me an invitation to visit you in prison. I'm very happy to visit you, but I won't be joining you. I'll be sitting here every day going up with my S&P. I won't be joining you. When is the earnings? Right now. Yeah, steak and peace. Cameron Griffin. I mean, we've got a very upset investor here. He said, I'm not making any money with the S&P. It's right back where it started. I've made 2% on it today, so I don't quite know how that's worked out. But anyway, so I said, I reckon you're investing in steak and peas, not the S&P 500. I've not heard back from him because since I made the announcement, he decided to go and rob a bank, so he's probably now in prison. They're very efficient in Minneapolis. Literally, the moment you even talk about it on YouTube of robbing a bank, they already knock on the door and arrest you, sort of ahead of the game, just to get the job done. They're very efficient. The Minneapolis police, very, very efficient. I just can't understand Rivian earnings tonight. I see more and more cars of Rivian. I could have covered the earnings on the extra channel, but nobody wanted it. People were lazy. I'm not paying $5 for that. So then don't then. Told you it'd be rubbish anyway. Didn't I say earlier Rivian would be rubbish? They lose so much money, it's beyond belief. I know you see I'm on the road, but because they pay for them to be on the road. Let's have a look. 121. Oh, they beat earnings. But they're still losing money. Yeah, I mean, it's just going sideways. They're not making any ground. Just look, we've been higher, lower. We're just going sideways. They're not making any ground at all, so it's not good. But that's no surprise. I said before that Rivian would be rubbish tonight. I said the earnings would be rubbish, and it is. Right, so that we've done that then, haven't we? We've made that video then, haven't we? Zach. Hi, Zach. How you doing? As long as we can stream Martyn Lucas. Yeah, as long as we can stream in prison, it's fine. Just make sure you take less than 1,000. You won't be prosecuted. But that's right. I've heard this. Yep. If you go into Target, grab a load of stuff, make sure that you nick $999 worth, and you'll be all right. You'll be get away with it. It's when you go over 1,000, that's when we have a problem. Yeah, we don't really care that you steal. Not bothered. We're not bothered about breaking the law, criminality. That's fine. Just don't steal more than $1,000. Still less than that is fine. Happy Christmas. Help yourself. Don't worry. Everyone's fine with that. I'm not, but people are. Let's run up like Lumin. Let's run up. Said Hydra Hustle Nursery. Hi, Stephen. Can you still invest in stocks from prison? I don't know. I don't know. I wouldn't worry about it too much if I was you. Cameron, I know you've just joined this channel. You've come from TikTok, which is incredible, really. You've come from TikTok. You've joined us over here. Really. I wouldn't bother. I wouldn't let it concern you too much, mate. If I'm honest, I wouldn't be bothered. I don't want you focusing on that. Because if you're focusing on that, you're focusing on the wrong things. If I rob a bank, can I deal in stocks and shares in my cell? I wouldn't waste time on that if I was you. I would focus on other things. There's better things to worry about. Like who's making me a cup of tea. That is more important, right? Quite frankly. Who's making the tea tonight? We've got to focus on what's important, guys. You're missing the point here. That'll be fine, Martyn, but saying Happy Christmas would not be tolerated. Yeah, that's right. Yeah, can't bugger that. When it comes to Christmas, guess what I'm saying? Happy Christmas. It's Father Christmas. I'm saying all of that. Bloody right. Yeah. Happy Christmas, Merry Christmas, Father Christmas. Absolutely right. Got it. There you go. Right, so don't worry about it then. I like Cameron. Me and Cameron are going to get on great. He's got the right sense of humour. He's got the right attitude. Yep, I got it. I understand. I've joined the channel. I'm in the cult. Yep. I'm following the rules. Yep. I'm happy with all of that. Yep. Yeah. I got it. Happy. Good. I'm glad we've come to an understanding, Cameron. Cameron decided that going to prison is rubbish. He's also decided that worrying about it, whether he can buy stocks and shares, it's not important enough for him. He's done with that. He's moved on. Isaac. That would be fine, Martin, but saying, yeah, we've done that one already. Yes, tea. See? James 007. He's more concerned. James makes the tea. James does make the tea. I don't have to worry. Do you know what? In my case, just for me, I can actually focus on going to prison because I've got James to make my tea. You're right there. I don't have to worry about that. So I can focus on, robbing a bank. I can focus on that now. I'm glad about that. That's brilliant. Thanks, James. Thank God you're here. James makes the tea. I don't live in Minneapolis. I was calling out I see. VP who lets the city burn and be looted like a few years ago. Go look. Yeah, I've seen it. It's terrible. Terrible, terrible. I cannot believe that people are allowed to do that. I don't get it. I don't understand it. Do whatever's necessary to stop people doing that. Go in with the army. I don't care. Do something. Protect people's property. What's wrong with it? Who's spilling it? Who's spilling it, though? Who's spilling? Who's spilling the tea? We don't spill tea here. This is the tea. This is a very, very passionate tea drinking YouTube channel. We don't spill tea here. No, there's no tea spilling going on here. None whatsoever. Don't come on here. Me and you are going to fall out, Cameron. You've only been my friend 3 minutes. I liked you a minute ago. But if you're going to start talking about spilling tea, there's going to be hell up. Right, we got 10 minutes for the earnings. Let's not fall out, me and you, Cameron. Need to think through all the details. If I was a rich man, need to think it out again. Oh, hang on, what was it? You got to pick a pocket or two, boys. You got to pick a pocket or two. I think I'll think it out again. Oh, brilliant. That's what we'll do. Pick a pocket. That's what's his name? Oliver Twist. Please, sir, can I have some more? Did you like that? Did you know when I was a little boy, I was in Oliver Twist, I was Oliver. What? You want to hear a bit? I can't do it now. 40 years ago, 50 years ago, I sounded like this. Hang on. Where is love? Who I close my eyes to see. If I ever know the sweet hello that's meant for only me. Where is she? Who I close my eyes to see. If I ever know the sweet... I'm holding a bowl. Please, sir, can I have some more? Now, you're thinking that's rubbish. If you actually go and look for Oliver Twist on YouTube tonight, right, singing Where Is Love, type it into Google. You will see I just did an amazing, exactly like Oliver Twist impression. I am not kidding. It was that good. You don't know it because you've got no idea. You need to go and check. All right? All right? So lock this in your head. Lock this audio in your head. Do it right now. Go and search for it. Where is love, Oliver Twist? Right? It sounds exactly like this. Where is love? Who I close my eyes to see. Please, sir, can I have some more? Go and look at it. You will go, Bloody hell, he's right. That was really good. You will say that. You'll come back tomorrow and go, he was exactly like it. I know. I used to do Oliver Twist years ago. I know how good I am. I don't need you to tell me. I know. I know. Big things to come. Big things to come, Cameron Griffith. Speaking of tea, James, it's time for a cup of tea for me. 5 steps ahead. Are the earnings of Lumin good? Yes, they've beaten earnings. They've beaten earnings. Mike, the snake, Ninja, Zach, yes, Stephen, Craig, it's time for a nice refreshing cup of coffee. Tea, sorry. Can't waste the goods. Yeah, that's right, got it. Okay, James Cameron, I like James. He's learning. Cameron Griffiths. James Cameron. We got a bit of Titanic here. Beer at the pool. Lovely. Stephen Lewandowski's always on bloody holiday. 10 minutes ago. 9 minutes ago. Tea is more precious than gold. That's right. That's right. Hi, Andrew. Kettle's on, James. Hit the like button. Visit Martyn's music channel. That's right. We're trying to get to 10,000 subscribers so we can raise millions for charity. Oh, Mike. Hang on. I know who'll do this. Cameron Griffith. I guarantee Cameron Griffith will do this. Cameron Griffith. Are you ready? You probably missed this. You probably know nothing about it. You probably know nothing. Oh, hello. My videos have uploaded. Bloody marvellous. Cameron Griffith, you know nothing about this, but I'm going to tell you now so you know all about it. Then you won't know nothing about it. You'll know everything about it, which will be good. Right? Right. This is what we're doing. We're trying to raise millions of dollars for charity, right? On my music channel. When I say millions, I actually mean millions. I've raised a lot of money for charity around the world, and I know how to do it. But what I need is to get to 10,000 subscribers on my YouTube channel, on my music channel. So YouTube, there it is. Look, 6,017. Here you go. All you got to do is click on that. There it is. Click on it. Subscribe to it right now. We have to get to 10,000 so we can turn on YouTube giving and raise money for charity. Okay? Now, when you click on it, if you've got public subscription so I can see it, well, it'll turn around anyway, but it'll put your name on the screen if you show your subscribers. But if you subscribe right now, that'll go 6,018. Okay? And when you've done it, tell your friends to do it. Everybody you know at work, put it on your social media. And why I say that is important because if you come back to me and say, Martyn, I've got 20 people to subscribe to you or whatever number, could you do a fundraiser, please, a concert to raise money for whatever charity you like? I will do it. Not only is the concert for free and I will do all the work for free, all the ad revenue, all the super chats, all the sponsorship that my channel gets goes directly to the registered charity. Yes, he did it. Look at that. It goes directly to the registered charity. And YouTube charge no fees, no credit card fees, no transaction fees. You can claim it as a taxable expense and it all goes to the charity. And I'm going to do unlimited amount of concerts for charity to help people. All right? And if you subscribe to the channel, as you just did, tell your friends, let's get to 10,000, all right? There's the link again. Everyone should do it. We've got 5 minutes to go. Everyone here tonight who wants to bring good karma on them should do it. This channel is about helping people, all right? Okay. And if you don't know, and if it all kind of is all falling into a bit of a blur, you don't know what I'm talking about, if you look below here, you will see I was voted by Elton John as the world piano man. And I've got lots of videos here of me doing concerts. I've got my own Vegas show. You can see here I did a Vegas show, obviously Vegas with Vegas Showgirls. There's me wearing Elton John's jacket he wore in Candle in the Wind. All sorts of stuff here. All on my channel. If you want to go and check it out, you can go and see. All right. There's a short at the top. Videos there we just brought out about the violence in the UK, and we got a party in Texas, 1 to 10. We celebrated Simone Biles, all sorts of stuff. Anyway, we're here to help people, and that's what this is all about. All right. Okay. There you go. I knew he would do it. Let's see if we got another one, shall we? 6,018. Okay, just held there. That's all right. That's all right. We'll get to 10,000. And remember, we'll do the charity that you want as well. Martyn, go mad again. What time to get a YouTube ad? Oh, did you get an ad right as I was saying it? When the market had an up day. I'm not sure you know what you mean. When the markets had an up day. What does that mean? Hello, Steve. Saw your photo in Discord. You look like you're loving life. Cool. He is. He's always loving it, isn't he? 4 minutes to go. Good God. Good God indeed. We're waiting for it to start. Martyn, you are cracking. Please, sir, can I have some more? Oliver Twist to the moon. See? Quite disturbing. Yeah. Yeah. Ding dong. Oh, what, in the voice? How long have we got? 4 minutes. 4 minutes before the earnings. Okay. Yeah. Ding dong. Da-da-da-da. Can we get love on? Yeah. Ding dong. I feel like we have a big ding dong. Oliver Twist. Oliver Twist does yeah ding dong. I wish I was James Cameron. I'd invest more. I agree. I would as well. Can I have some more yeah ding dong? You just add it. As long as you don't say Griffith. What did I say? Griffin. Cameron Griffin. Sorry, I'm getting his name wrong. The Griffiths removed themselves from the Griffins and normally their family according... All right, okay. Martyn, did you say any of the remixes of your shorts we did the other day? Martyn, did you see any of the remixes of your shorts we did the other day? No. I don't get to see them. Send a link in. Put it on Discord. I'll go and check it out. Oh my God, says Artemis. Can I make profits? Can I make my profits? Can I make my portfolio a charity? No. It's a registered charity. It's a real thing. Loved your music. And I've told my best mate about your channel and he said he would check it out. There you go. Good God again. Andrew, that's definitely going to be part of a Barbie sketch. Yeah, I'm sure. Right, enough of this nonsense. This is a serious channel. For those of you who say, oh, his channel, he's just making fun, having a laugh. Yeah, bloody right. Making fun and making money should be fun. Gives you the right attitude, right? Okay. Let's get ready. Luminar earnings. This isn't a very popular earnings. There's not many people watching. They think it's rubbish. That's all right, isn't it? Don't worry about that. We'll have a big one tomorrow. Virgin Galactic. Ooh, we'll have 1,000 in tomorrow. You wait and see. Luminar earnings. Okay. We're waiting for the earnings to begin. Come on then, bad boy. All we can do is wait. It's called patience. Patience is the name of the game. Click open. Click open zoom.us. Here we go. All right. Any moment now. This is what we're looking at. I'll share with you look at what we're looking at. You ready? This is what we're looking at. A lovely little flower. Luminar Technologies. I'm loving it. That's what we're looking at. They've got no audio at the moment. So I'm going to make sure that if we get any audio coming in, we don't get a surprise. I'll just mute that there just in case. All right. So typically these things are a bit late. So don't be surprised if we go late. It's kind of the deal. I'm going to keep refreshing the screen. You have to. We don't want to miss it, right? To be honest, I'd be fine if the S&P goes back. I'll buy more. Yeah, well, not for me. I'm fully invested now. All the money I ever need to make $1 million. Seriously. I've got nearly $200,000 invested now. The S&P doesn't need to go down for me ever again. All I want to do is make $1 million on this show live, and that's what I've got. I've got enough invested now to get there in 6 years. I don't need to buy any more. No, I don't need to buy dips. I've already done it. That's it. How about that? Right, we're still waiting for the hoe to start. Typically, these earnings do go 1 or 2 minutes late. If you've never seen an event like this, you'll know that's the way it goes, so just bear with us. It ain't my fault. I'm not late. I'm early. I'm always early. Blame LAZR. But this is normal. Okay. Waiting for the host to start the webinar. All I got to do is look at this screen. If you just tuned in, click subscribe or ring the bell. Tap the like button. That'll be good. There you go. Real, Mr. Easy Street. What you think? I don't understand your comment. Here we go. Here we go.
Recording in progress. Welcome everyone to Luminar's second quarter of 2024 business update call. My name is Aileen Smith, and I am Luminar's head of investor relations. With me today are Austin Russell, Luminar's founder and chief executive officer, and Tom Fenimore, our chief financial officer. As a quick reminder, this call is being recorded, and you can find the press release and presentation that accompany this call at investors.luminartech.com. In the interest of providing the most informative experience for our stakeholders, we're making the following changes to our reporting and discussion this quarter. In a moment, you'll hear some remarks from Austin focused on providing our shareholders an update of our vision and strategy, what differentiates us from others, as well as our progress over the past few years and this past quarter. This will be followed by remarks from Tom, focused on our recent capital structure actions, quarterly financials, and financial outlook. Following these remarks, we will open up the call to Q&A. Our Q&A session will primarily consist of questions from the institutional analyst community.
Couldn't resist.
To ensure we're addressing as many as possible, we would ask the analysts limit their questions to one with one follow-up. Before we begin the prepared remarks and Q&A, let me remind everyone that during the call, we may refer to GAAP and non-GAAP financial measures. Today's discussion also includes forward-looking statements based on the environment as we currently see it, and as such, does include risks and uncertainties. Please refer to our press release and our presentation for more information on the specific risk factors that could cause actual results to differ materially. With that, I'd like to introduce Luminar's founder and CEO, Austin Russell.
All right. Hey, guys. Can you hear me okay?
Yes.
All good, Austin.
We can hear you.
Awesome. Well, thanks everyone for joining our second quarter business update conference call. So today we're actually in Boston at our newest office for a specialized chip subsidiary, Luminar Semiconductor Inc., which is just 10 minutes down the road from our current receiver R&D and fab location we've owned since 2021. So we shared this news a little bit last week regarding the acquisition of EM4. A bit of a small one, but we've since integrated the business, and we've helped grow our semiconductor business overall to break-even status on our overall path to profitability. But that's not what we're here to talk about today. Today, we've signed a definitive deal with our bond investors for Luminar to be able to reduce and restructure our outstanding debt, exchanging around $422 million in notes for $274 million, and pushing out their maturity from 2026 to 2030. We've heard feedback and know how important this debt topic was for some investors to de-risk the business so we can realize our full upside, and this is our solution. Additionally, the investors agreed to provide Luminar with $100 million of new non-dilutive debt capital. Combined, this gives us the resources and runway to be able to execute the opportunity to realize our full potential. It's a huge vote of confidence that Luminar is not only here to stay as a cornerstone of our industry, but that we can thrive throughout the decade. And we'll let Tom provide more details on the deal in his remarks. So for today, we're going to try something a little bit different. I've heard a lot of questions, around the fundamentals of Luminar, and that people could use a reminder as to why we're all here and kind of going back to basics. So I'd like to take a few moments to talk through some of the industry dynamics and the thesis of Luminar, including some specifics on our business, technology, and what makes us so unique and best positioned to be able to capitalize on this new era of assisted and autonomous driving. Going back to basic may normally be out of character for myself, but I think it's important that we level set as to where Luminar and the broader industry is currently at. So to kick it off, I'd first like to say that it's an incredibly exciting time here at Luminar, and we are at the forefront of this new era of safety and autonomy for drivers around the world being ushered in. And over the course of the past decade, the opportunity around the autonomous vehicle industry has led nearly every major technology company and automaker flocking, to this industry. And autonomous driving is one of, if not the most significant applications of AI into the real world to be able to enact positive change. With that said, of course, realizing the benefits of autonomy has been one of the greatest technical challenges mankind has faced since the US delivered on the Apollo space program in 1969. It's the best analogy you can think of. So realizing the full potential required radical innovations in many areas, ranging from Lidar to AI to become a reality. So we can separate this challenge into the different levels of autonomy, and two distinct trends emerge. One is enhancing drivers, and the other is replacing drivers. So while most autonomous vehicle companies have generally been focused around replacing drivers, Luminar's thesis and corresponding products and technology have always been focused around enhancing drivers through autonomous and safety features on existing production vehicles, rather than going all out for driverless robo-taxis. You probably know about the different levels of autonomy, but as a refresher, we'll briefly cover them. Level 0 through 2 is what the majority of automakers are shipping today as assisted driving features. This includes both basic active safety features like automatic emergency braking, all the way to lane keep assist features. At these levels, the driver must remain attentive at all times and is ultimately responsible for driving the vehicle. And this is generally enabled by existing camera and radar technologies that have become widely standardized by the industry over the course of the past decade. There's a strong desire for automakers to begin to realize some of the benefits of autonomy before the higher levels become widespread, and establish the next generation of assisted driving technologies, which is where Lidar comes into play. This is a fundamental driver behind many of the existing partnerships, as well as automaker dialogues we're having. Car companies recognize that consumers are asking for the most advanced safety and technology features, while regulators at the same time at NHTSA have recently announced a mandate for all new vehicles sold, at least in the US, to begin meeting these dramatically heightened safety standards starting in 2029. In automotive years, by the way, that's basically right around the corner. And we've successfully demonstrated how we're uniquely able to meet these new requirements at speed and at night, and are not aware of any other technology that has been able to demonstrate these capabilities. Our claims are supported by third-party studies, including one from Swiss Re, the world's largest second reinsurer, that we presented at Luminar Day. As a reminder, Lidar is able to uniquely measure the exact distance to objects in 3D using laser pulses between the sensor and the object of the road. And in our case, we're able to do this millions of times every second. Knowing these exact distances to objects is what makes Lidar so special as compared to legacy camera-based technologies, which effectively have to guess where objects are in 3D by extrapolating it from 2D images. Sometimes cameras are right, and sometimes they're wrong. And when it comes to a safety critical application, that's why, when you're using camera-based technologies for L2 applications or in that range, the driver has to always be paying constant attention, ready to take over at any given moment. From an active safety standpoint, it's also part of the reason why we still lose over 1 million lives every year to vehicle accidents at a global scale, which camera and radars alone have not been able to prevent. The enhancements of Lidar also become even more apparent at night, since the Lidar image looks exactly the same in all kinds of conditions. The camera-based technologies experience significant performance degradation at night and in other kinds of inclemental weather conditions. So moving on from the basics of Lidar and more fundamental assisted driving features, the next phase of evolution in the industry is to begin to introduce level 3 autonomous driving features. While Lidar is something that can enhance levels 0 through 2, it's widely understood by virtually all industry experts and automakers that long-range Lidar is a fundamental requirement for operating autonomously, where the driver is no longer in control and responsible for the instantaneous supervision of the vehicle, at least in constrained scenarios. This leaves little to no room for error, and hence why we agree that, and why most industry experts agree that there's effectively a 1-to-1 correlation between level 3 equipped vehicles and Lidar shipments. We believe the widespread adoption of level 3 is inevitable, but also much more achievable in the nearer term compared to level 4 and 5, which are generally focused around robo-taxis. We can talk a little bit more about if people have questions in Q&A. While there have been sparse deployments of level 3 systems to date with lower performance LiDAR, they have all operated at both low speed and in highly constrained operating domains. Our customers and the broader industry generally agrees with us that the real boom, for these kinds of level 3 systems comes as they're able to perform full speed highway driving without requiring the humans to constantly intervene. This is how the driver can ultimately save time, and whether it's, using your phone, work on your laptop, taking a nap, to be able to recover that time during your drive is something that is a target of the level of feature that people want to get to. And when you're at high speed, this is where the importance of our long-range capabilities come into play. In a few moments, I'll touch on why this is important for us and also what makes Luminar truly different. So overall, this trend has already started with some of the higher-end automakers who have upgraded our low-range LiDARs to our technology for higher speed level 3 driving as an application. And then, of course, it's also the same hardware that we have that can enhance the ADAS capabilities for the level 0 through 2 application. As we get to 2030 and beyond, we expect level 3 to become mainstream by nearly all automakers and will ultimately begin to be standardized. It's nevertheless important to note that adoption cycles in the automotive industry take time. From seatbelts to airbags to camera to radar, it's historically been around 2 decades from the first time of introduction to when they ultimately became standardized throughout the broader industry. In this case, we believe all signs point to the LiDAR adoption cycle being substantially faster and generally looking forward to being introduced even more widely on next-generation automaker platforms, the ones that we've already discussed, as well as ones that we'll have in the future. So when it comes to the accelerating market and ultimate inevitability, the big question turns to why Luminar? What's our special sauce, so to say? And of course, there are many differentiators here across the board, including the fact that we have a uniquely vertically integrated strategy from the chip level up, through the LiDAR, through software. But first, let's talk about the thing that makes our LiDAR so unique. The technology starts with a special wavelength of light that we use at 1550 nanometers versus the industry standard 905 nanometers. One of the most fundamental limitations of lasers is eye safety, both in regulation and in practice, which is the limiting factor on how much power can be put out from a LiDAR's laser and correspondingly the performance. We operate at a much longer wavelength than others in the industry, which enables us to put up to 17 times the average energy into the environment. Because we use this 1550 nanometer wavelength that's safe for the human eye, the increased pulse energy delivered translates directly to a dramatically better performance at longer range for the 3D point cloud sort of picture, you could call it, of the environment. This is required for cars to be able to operate safely in higher speed level 3 autonomy mode, as well as enable reliable high-speed active safety features. Specifically, and because of our technology stack, we're able to see and even detect some of the hardest to see objects at distances past 250 meters in all ambient light conditions. And our performance is able to be maintained even when looking for hard to see dark objects, such as a spare tire on the road at night. Our maximum range can even be extended out to as much as 600 meters. This stands in stark contrast to our competitors' technologies, which generally can only reliably see objects required for safe driving at distances up to 100 meters. While these shorter perception distances are suitable for low-speed autonomous driving applications, it's insufficient to safely maneuver at highway speeds. And that 100 meters is only a couple seconds ahead at those speeds, which is not nearly enough time to be able to come to a safe stop. We're able to reliably see a full 7.5 seconds ahead down the road, which is enough time to be able to come to a safe stop in nearly any kind of vehicle. The performance can also directly translate to lives saved, and the majority of accident fatalities actually occur at speed, making it all the more important. Getting to this stage in technology advantage was anything but easy, but nevertheless begs the question of why hasn't everyone followed in the footsteps over the years? I think it's well understood that the performance advantages of 1550 versus 905 nanometers. But the simple answer is that 905 nanometer components have generally been available off the shelf from commodity suppliers, which has enabled the least path of resistance and the lowest initial R&D investment to develop a LiDAR. In contrast, Luminar uniquely developed our 1550 nanometer technology from the chip level up, where we had to create multiple fundamental innovations to make 1550 nanometers possible from both a technical, supply chain, and economic perspective. This is where some of the magic happens of having a truly integrated ecosystem with semiconductor and software capabilities that come into play, which further deepens our competitive moat. In aggregate, we've invested roughly $1.8 billion over the years to develop this unique technology platform, and now have the opportunity to ride that investment curve off of its coattails. I'd like to dig into each of these factors, starting first with the semiconductor. Luminar has been developing its own semiconductor technologies to act as the core technology engine of our LiDAR for the better part of a decade. Whereas 905 nanometer lasers require normal silicon photoreceivers to detect the light, 1550, on the other hand, requires some custom specialized indium gallium arsenide materials to be able to operate. Given how specialized InGaAs development is, or the indium gallium arsenide, and the fabrication expertise is, it was imperative for us to be able to find the relevant teams and companies that can design to our specification, fab the components, and in these cases, some of them are the only ones in the world that know how to do it to meet the required specifications for what we need. Over time, we started vertically integrating and consolidating some of these specialized companies that we were working with, starting with Black Forest Engineering with the central processing ASIC in 2017, Optigration with the indium gallium arsenide receiver chip in 2021, and Freedom Photonics for the laser chip in 2022. This ultimately formed the foundation for Luminar Semiconductor Inc. And of course, with the recent addition of the chip packaging operation, we're here right now is LSI's latest addition, which continues the vertical integration trend. As a result, our product development and architecture approach drives a structural technology advantage for the chip level up, whereas our competitors are essentially built off-the-shelf LiDARs that have inherent performance limitations. And in doing this, we've also ensured the technological sustainability of our moat by vertically integrating all these components. As a further proof point to some of our foundational technology breakthroughs, we've actually been quite successful in capitalizing on the IP and technology we've developed for our LiDAR, even for other customers and applications with their semiconductors as well. Luminar Semiconductor Inc., which is what it was calling LSI, now has over 100 unique customers, including top technology companies, defense contractors, aerospace businesses, among others, with our chip technologies live everywhere from satellites to GPUs right now. As a result of this success, we've now achieved an estimated external lifetime commercial program value in the 9 figures from our internal forecast and break-even status on the business. This is a first major step in our path to profitability, with the next major milestone being at the LiDAR level as we ramp up series production over the coming quarters with Volvo. Zooming back out, I'd like to talk also about software for a moment. So on the software and AI front, we think it's clearer than ever that the artificial intelligence capabilities are there to be able to help unlock the next levels of autonomy. And with AI, it's really all about the data and the quality of data. So for each of our dozens of customer deployments of LiDAR, it's generally paired with a matching software and AI system that is trained on Luminar's 3D data. AI models developed on our LiDAR are a big leap forward when compared to traditional models that are powered from 2D data, because it's true ground truth 3D data. So it's eliminating the guesswork as to where the objects are and achieves an accurate true to life model. So at an industry level, some of the most advanced vehicle OEMs do have their own extensive software departments, but attracting the best software talent to traditional automakers can be quite difficult. And most automakers do not have an in-house solution in development to achieve the advanced software capabilities and higher levels of autonomy. So we predicted this would be the case quite early on in Luminar. And in 2017, I had kickstarted our AI and software initiative centered around the required LiDAR-related software in order to help assist automakers in their developments. Our software technologies have been primarily developed in our Silicon Valley offices, as well as Munich, Germany. And we work closely with our Silicon Valley technology development partners and software development partners, ranging from Scale AI to Applied Intuition. So our work with a few of the more technologically advanced automakers had started earlier on, including companies like Volvo, Mercedes, and Nissan, with some software, although they do much of their software in-house, being some of the leading players. That said, again, the vast majority of the automakers in the industry don't have a viable solution and preferring to the fast follower approach as they've done in other kinds of advanced technology adoption cycles. So this embedded software capability for Luminar not only helps expand our addressable market from a LiDAR standpoint, content value and margins per vehicle, but also importantly enables our LiDAR to be able to reach the majority of the automotive market that otherwise wouldn't be possible without software. It also further expands the stickiness of our product and moat. And we've really seen and developed fantastic partnerships over the years with top ecosystem companies, ranging from NVIDIA to Mobileye, which allows us to collectively advance this industry as a whole. These software capabilities make Luminar unique in this respect. And I'm proud to say that after 5 years of development, we recently launched our Sentinel software suite, shipping the first kit in Q2. We expect the initial shipments to major automakers to begin shortly and to be in their hands before year-end. In recent history, we've also seen an increased demand for direct engineering collaborations with automakers, as well as RFQs for software capabilities from us. So our software and ecosystem strategy is not too dissimilar from the strategy that Apple had in the early days and what Steve Jobs' plan was for the initial iPhone launch. It was all about getting the disruptive products to market at a global scale, and in the subsequent years, building out the ecosystem around them. And the first product didn't even come, as you remember, with the first iPhone, with an app store. But importantly, as consumers increasingly realized the value that it was able to deliver with both software and hardware enhancements working in tandem, it ultimately kicked off one of the greatest technology revolutions of the century. And really, we've taken a similar approach. And I truly believe that with the Volvo launch, for our industry, this is truly the iPhone moment, as the technology becomes widespread on a global basis for the first time and kicks off a plethora of subsequent vehicle launches for us over the course of the next 24 months. Now, with all of these tailwinds, technology advantages, and industry success, you can see why we continue to be so excited here at Luminar. But nevertheless, I think it's important to take a step back and recognize, despite this positive outlook for Lidar being arguably greater than ever over the long term, as it evolves to become a more foundational part of the broader automotive technology industry. In the near term, there are headwinds where automakers have faced timing and production ramp challenges for some new platforms. And while this is not related to Luminar or Lidar specifically, it's widely understood that new automotive platforms in the industry, which would be used to introduce new kinds of technologies like this, have generally been shifted out by around 1 to 2 years. And the reality is that these new vehicle platforms are incredibly complex on a supply chain, software, and engineering standpoint, and require more time than some of the automakers were originally targeting to begin with and to ramp and deliver at scale. We've seen the effects of some of these delays across the industry, and the downstream implication to Luminar has not been unique. The most prominent example of this is in the EV space, but it's also very important to note that when it comes to Luminar's technology, we are agnostic to the underlying powertrain in the car. And while people oftentimes try to bucket these technologies together with our LiDAR and EVs, there's actually no underlying technical correlation. In fact, the majority of new vehicle platforms Luminar has planned into actually offer combustion engine vehicle variant. In light of this, our focus has become not just in the long term, but also in the near term, and we've taken 2 major actions and directions as a result. One on the operational side, and the other is on the finance and balance sheet side. So from an operational standpoint, start off with the first one, the focus was to start increasing the efficiency of our OpEx overhead now that we've already made the required technology investments and achieved the series production launch that we've all were waiting for years, and excited to succeed with that. And as part of that, we were moving towards an outsourced model towards certain parts of our business for partners that were willing to dedicate the appropriate resources. An action we took last quarter and included a reduction in our internal workforce by around 20%. Additionally, we are actively tackling variable cost and fixed COGS overhead in order to ensure that we can maximize our success as we ramp and the volume starts to really matter post-SOP. The next step in streamlining, the next step beyond that is also streamlining our product development processes, among other things that we'll do over the course of the coming quarters. One major action that we took this quarter to save tens of millions of dollars, as an example of this, on product development costs, is to better unify the Iris product family by increasing the percentage of shared components from a technical and supply chain standpoint between products and customers. This is reflected in a one-time charge in our financials that has some downstream non-cash accounting implications for the quarter that Tom will discuss in more detail. We'll look to continue advancing our operational efficiencies as we achieve economies of scale over the coming quarters and bring down both overhead and variable costs, making it easier to ultimately achieve profitability on our journey. So critically today, I'm proud to say that we're directly tackling the second topic as it relates to the balance sheet. As I mentioned at the beginning of the call, today we signed a definitive agreement with the consortium of these bond investors to restructure the debt, provide new capital, and push out the maturity of these bonds from 2026 to 2030. Importantly, this gives us the sufficient freedom to operate and thrive in a world where we described earlier as being characterized by 1 to 2 year delays in the ramp of new automotive production platforms and programs. While this is a major step and vote of confidence that enables us to responsibly invest and grow, it is not the last step that we'll take to support our capital structure. And importantly, Tom can get into a few more details on the details of the deal and the capital structure in his section. So I'd like to round out my comments with a few updates on some of our extensive industry partnerships as well and some new developments ahead. So closing the loop on Volvo, as you know, they began their start of production this past quarter for their new platform and the flagship EX90, following our previous announcement at Luminar Day that we had started our series production, our SOP for them. We've since successfully ramped our production to meet all key Volvo deliverables, and we're looking forward to seeing them continue to scale. In their last earnings call, they provided some commentary that the initial ramp will be a little more moderated than their initial target, but nevertheless is still growing exponentially. We expect to ship more sensors in the second half of this year than all of our prior years as a public company combined. As noted in commentary, series production ASPs are a bit lower than our sample ASPs. So with that moderated ramp, as would be expected, it will really take until next year when you start seriously seeing the big step up in revenue from this ramp. So as we scale, we've already started to see some of the benefits that said of the economies of scale in the production deployment. And imminently, you'll start to see our technology on the road in a more widespread capacity for the first time at a global scale, which is driving a virtuous cycle for us across multiple domains. So as we scale up, we've been realizing substantially higher yields, lower supply chain costs, improve overhead absorption, and of course, the marketing benefit that comes when Luminar gets exposure to consumers for the first time, as they'll see our technology prominently featured on the EX90's roofline across the globe. We're proud to be enabling this first global production consumer vehicle with Lidar and a standard on all vehicles, and are looking forward to an additional upcoming SOP in China by year end, which will further drive vehicle volumes for them and product sales for us. So moving on to Mercedes, we're moving full speed ahead and recently have made some improvements into our product roadmap. As I mentioned, we'll be unifying our Iris platform with a greater percentage of components and content value shared, which we should expect to substantially reduce development costs and the time frame for bringing these programs online. So we're excited about what the future holds for the partnership and look forward to updating further as we achieve further milestones ahead. Our partnership with Polestar also continues to progress well, and they remain on track to launch their first vehicle with our Lidar, the Polestar 3, next year, and have additional models slated to incorporate Luminar technology for release after that. Excited, just got a note of being able to do a test drive to go check it out. So excited to be able to do that also soon next month. So with Nissan, we've also recently completed the most recent phase of our technical collaboration and are scoping out the next phase of our work together. They've continued to impress me with their assisted and autonomous driving team's capabilities, and I'm as excited as ever about their vision to standardize the technology across all vehicles they produce to realize the benefits of improved safety and autonomy. Meanwhile, our partnerships with companies like NVIDIA and Mobileye continue to be as strong as ever as we make forward movement in our joint systems development. These ecosystem partnerships and collaborations are highly complementary and will drive further acceleration of our long-term success as we design new vehicle platforms together and win together. As it relates to other automakers, it's meaningful to note that the majority of them already have long-range LiDAR as a requirement planned into the roadmaps. Keep in mind, vehicle program cycles can last as long as a decade. So this is not like the consumer industry or smartphones where new technologies are introduced every year. These vehicle platforms and the automotive technologies and certification that goes into it is highly complex. People's lives are at stake in this industry. So it moves at a very deliberate pace. Very high barrier to entry, but also very high barrier to exit. So we're actively engaged with these various automakers and the majority of major automakers at this stage. And we look forward to updating with more specifics on new customer awards into the future. Before I close out my comments, I'd also like to add that we're making great progress on the development of the Halo product, which, as we discussed at Luminar Day, makes drastic improvements to performance, size, as well as cost, and is enabled to be seamlessly integrated into the vehicle. Whereas the Iris product family was created to show the industry what was really possible, Halo is what will enable this technology to become widespread throughout the industry, and we expect quite profitably. As we accelerate the program, we'll also be delivering samples now to select automakers by year end. So that's the big update there. And with that, happy to be able to turn the call over to Tom to give more details on some financials. With that, go ahead, Tom. Thank you.
All right. Thank you, Austin. Great update on where we are at Luminar. Let me start by reviewing our Q2 financial results. Revenue for the quarter was $16.5 million, up 2% year over year, but down 22% sequentially. As we previewed during our Q1 earnings call, we expect the Q2 revenue to potentially be lower. Let me provide a bit more color on this. We saw an expected moderate ramp in series production sensor sales during the quarter. We are continuously meeting Volvo's weekly production schedule and are prepared to ramp up our production as Volvo ramps up theirs. As discussed on their most recent earnings calls, Volvo expects to ramp EX90 production in their US facility in the back end of this year and early into next year, while production in their China facility will commence more towards the end of this year or early next. This represents a more moderated ramp than we were initially anticipating, but we remain confident in reaching targeted production levels next year. During the quarter, we revised the product design and project scope for Iris Plus with our lead customer to increase utilization of Iris in the product architecture, as Austin discussed earlier. This move should improve operational scale and efficiency, as well as de-risk execution. This revision resulted in a largely non-cash accounting adjustments this quarter to both revenue and gross loss. Specifically, it resulted in $4 million sequential decline in revenue, and our revenue would be roughly flat if not for this, and a $10 million contract loss to COGS. For the quarter, we reported a gross loss of close to negative $14 million on a GAAP basis and about negative $12 million on a non-GAAP basis. Our gross loss this quarter included about a $10 million contract loss that I just mentioned. So excluding this contract loss, we would have been close to break even and a little less than a $2 million loss to be precise on a gross basis. This quarter-over-quarter improvement was helped by lower inventory charges, scrap, and other launch-related charges from ongoing process improvement, including our manufacturing yield. Our change in cash during the quarter was negative $57 million, an improvement from almost negative $72 million the last quarter. We ended the quarter with $211 million in cash and liquidity, which includes marketable securities and our $50 million undrawn line of credit. It excludes the actions which I'm about to discuss more detail that we announced today. During the quarter, we raised $19 million under our equity capital finance program. Now, let me talk about the balance sheet actions we announced earlier today. We announced that we entered into a private, separately negotiated exchange transaction with certain holders of our existing convertible notes. These note holders will exchange at a 35% discount, $422 million of convertible debt due in 2026 into $274 million of new convertible senior secured notes maturing in January of 2030. Additionally, as a sign of their confidence in Luminar's future, these investors are also providing $100 million of new capital in the form of non-convertible, non-dilutive senior secured notes. This transaction will reduce our total convertible debt by nearly $150 million while raising $100 million of new capital. We filed an 8-K after the close with further details on this transaction. This transaction is the first and most important step in improving our balance sheet. Over 2/3 of our convertible debt maturing in 2026 has now been extended into the next decade while capturing a 35% discount and reducing our overall debt. Over the next 2 years, we will continue to chip away at the remaining $200 million or so of convertible debt that is maturing in 2026. During last quarter's call, we estimated we would need approximately $200 million of additional capital to reach profitability. Half of this additional capital has been raised as part of this transaction. We have multiple alternatives to raise the remaining $100 million, and we will do so in a thoughtful way that minimizes the ultimate dilution and economic impact to our company. In the meantime, we expect the additional capital raised in connection with this transaction to extend our liquidity runway from the end of 2025 to at least the end of 2026. Let's talk now about our cost reduction efforts and path to profitability. In May, we announced shortly after we reached Volvo SOP a major cost restructuring effort that will include outsourcing more of our industrialization efforts to existing partners like TPK. This will allow us to move faster with our product and industrialization efforts, streamline operations, and most importantly, increase our path to the speed of our path to profitability. As a result, we had to make some tough decisions, including reducing our workforce by approximately 20%, as well as other cost reduction efforts. In total, we estimated approximately $80 million in run rate savings to be achieved with these actions, and we are on track to achieve this target by the end of this year. We have largely completed our headcount reduction plan and continue to complete other actions like contractor reductions and facility subleasing. Our current top priority is to improve our sensor unit economics and reduce our COGS overheads to reach positive gross margin. As discussed earlier, we expect our gross loss, excluding the contract loss we announced earlier, to increase over the next couple quarters since our series production sensor ASP is lower now, and we need a bit more time and production scale to reduce our sensor costs to match. We expect to achieve positive sensor economics and gross margin sometime next year after we ramp series production. Further, to achieve this, we are actively engaged in real-time negotiations with key partners to improve contractual economic terms, and we're making good progress in this effort. We plan to update investors soon with more precise timing of when we expect to achieve positive gross margin. Now, let's close it out with guidance for the remainder of this year as well as the next quarter. Due to more moderated ramp up in series production, we are pushing out our prior guidance to reach a quarterly revenue run rate in the mid-$30 million range from the second half of this year to next year. For Q3, we expect revenue to be in line to modestly higher versus Q2. This reflects a sequential increase in series production revenue, offset by a potential decrease from a non-series production customer contract we are currently renegotiating. We expect our Q3 loss to increase versus Q2 levels of $2 million, excluding the contracts loss I referenced earlier. A slower production ramp up over the next couple quarters, while negative for revenue, is actually helpful for our gross loss and net cash spend levels, given our current pre-scale sensor economics. Consistent with our prior guidance, we expect to end the year with greater than $250 million in cash and liquidity. This includes both marketable securities as well as our $50 million line of credit. This increased guidance reflects $100 million in new capital that is coming in as part of this transaction I announced earlier, net of fees, OID, and the higher interest expense. I would also note that we have $131 million remaining on our equity finance program. In the coming days, we expect to file another supplement to increase this to fund the incremental interest expense as part of this convertible debt transaction we just announced. We are also evaluating under various stress case scenarios whether we need to hold a special shareholder meeting in the near term to increase our authorized share count, given our recent and contemplated balance sheet actions. To conclude, I want to thank the broader Luminar team. I just celebrated my 4th anniversary at the company and been amazed at how much we've accomplished in my short time here. We've achieved a lot as an organization, and we have a lot more to improve with continued successful execution. I have no doubt that the product, talent, and work ethic to succeed exists at this company, and we will all capture it. Rest assured, we at Luminar are laser focused on making this company a success. I also wanted to thank my wife and family for moving out with me in the middle of COVID to join this job over 4 years ago, and putting up with a suboptimal version myself as we kind of got earnings in this balance sheet restructuring over the finish line here in the near term. With that, Aileen, I think we're ready for Q&A.
Fantastic. Thanks, Tom. All right, we're going to hand it over to our analyst community. Our first question is going to come from Josh Buchalter at TD Cowen.
Hey guys, good afternoon. Thank you for taking my questions. I wanted to ask about the Volvo ramp. The slower ramp than expected, was that related to anything with the software issues that have been pretty public regarding some of the features not being turned on at the initial launch? And maybe you could just provide some background, because I think that's an area of concern for investors, given some of the comments that were made last year and then sort of the bumpy rollout of some of the software issues with the initial launch of the car. Thank you.
Yeah, no, Josh, once again, it's unrelated to the software. Any automotive launch that you have, there's always going to be bumps on the road, and it's not going to go as smooth as like everybody was hoped. It's taking a little bit longer, but they're ultimately going to reach those production levels. It may take just a quarter or two longer. From our perspective, we're meeting their weekly production targets, and as they ramp up, we're ready to ramp up. So there's certain things we can control, certain things we can't, but we're ready to go. And Volvo remains optimistic that they're going to get to ultimately where they want to be from a production level.
It's all supply chain stuff.
Got it. Thank you. And then I wanted to ask about some of the component changes. It sounds like in Iris Plus. Could you provide some background on why those changes are being made, any performance or commercial implications of the change roadmap with Iris Plus, and then bigger picture, how have been the initial engagements with Halo, probably more importantly? Thank you.
Yeah, so basically what we're doing is we're utilizing more of the Iris architecture for Iris Plus. That's going to allow us to capture more efficiencies, both on the industrialization process, as well as ultimately once we get to series production for that product. I think as Iris came together, it's performing better than expected and allow us to borrow more of that technology to kind of de-risk the Iris Plus. The accounting wise, this is very complicated. It's multi-year engineering work that we're doing. And as part of that rescoping, we had to take the, accounting charges for this quarter that we talked about. But the underlying economics of the contract have not changed materially. And we actually believe that it's going to allow us to move more efficiently going forward as well as de-risk overall execution.
All right, I appreciate it, Tom. Austin and Aileen, I'll hop back in the queue. Thank you.
Great. We will take our next question from John Babcock at Bank of America.
Hey, John.
Hey, guys. Thanks for taking my questions. I guess, just start out, could you bridge the new target for cash and liquidity, to your old target?
150. There's 100 million in new capital coming in. When you actually look at some of the OID as well as transaction fees, it's closer to 95, and then the incremental interest expense brings it to 90. 150 plus 90 equals 240.
Okay, gotcha. Pretty simple there then. Okay, thanks. And then, I guess just generally, it does seem like, the adoption of autonomous driving technology in cars has been slower than expected, particularly in North American and European markets. Can you just talk about, how what your plans are to drive growth from here, in light of that? Obviously we've seen a number of, vehicle models, both EVs, but also even non-EVs get, pushed out. So if you could, I don't know whether it entails maybe looking at opportunities in, OEMs in China and perhaps trying to penetrate that market more, or maybe looking at other sectors, any sort of, kind of discussions you've had internally that, might help to drive volumes, in light of what's kind of occurring from a macro level.
No, it's a great question around that. And when it comes down to it, I think it's all just about the automotive platform timings of this. As we had said during the call, I think it's well understood. And as you see with many of the EV companies that, the timelines for the new platform launches, which are generally used to introduce these new kinds of technologies, have pushed out on the order of about a year or two, versus earlier in the 2020s here. As they sort through, as I said, supply chain software, all those other kinds of things that have to come into play. So I think in this case, it's actually less about the capabilities that are being deployed, and rather more about how they can get to market as quickly as possible with these new platforms. So that growth curve is still very much intact and arguably even greater than ever. And when it comes to the midterm and longer term, it's really just the near-term headwinds that we're talking about here, that as people try to get these to SOP, that makes a difference. So that's the focus there. Of course, from a customer standpoint, an overall order book, that's really where you start seeing in the latter half of this decade, that to really exponentially accelerate and take off. And, even with our existing customers, there's tens of billions of dollars of value opportunity for us to be able to achieve, with them alone, much less with new customers. So at this point, it's really all about execution and how we're able to do that, how we're able to successfully scale with that. So, and I would just say, from a product standpoint, Halo is really the product that's going to be able to enable that to be possible. And that's where we've received an incredible amount of excitement and interest from automakers with regards to the next generation technology, in particular in light of also some of the new safety and ADAS regulations, as well as, just the overall notion of being able to have increased performance, lower cost, and even better integration across the platforms.
And John, we're focusing on the things we can control. The steps we took today with the balance sheet in terms of extending the maturities, bringing in more capital, it gives us more time and more capital to kind of recognize that longer term growth, which is as strong as ever. And then we're also looking to aggressively reduce our costs, both the fixed costs as well as our sensor economics to kind of get to profitability faster, even with less volume in the near term.
Okay, thank you. I'll get back in queue.
Thanks, John. Our next question is going to come from Jesus Gonzalez Lopez at JP Morgan.
Hey guys, thanks for taking my question. And congrats on shipping out some Sentinel units this quarter. Just wanted to hear, what the early feedback from OEMs has been on this product, and maybe what the per vehicle revenue opportunity for Sentinel looks like on a run rate basis.
Yeah, I mean the feedback has been incredibly positive all around there, and that's where obviously going into this there was a lot of skepticism. Hey, like, is Luminar going to be able to make it to series production? Are they going to be able to achieve these milestones? Are they going to be able to get their production facilities online? Are they going to develop this global complex supply chain? And we were able to successfully make that happen. And that from an execution standpoint, we've knocked it out of the park when it comes to those topics. But there's still a lot more work to do. And that's really where it comes to the operational efficiency and the cost when it comes to scaling that production, as well as being able to continue to advance the overall product roadmap that we have, beyond the initial Iris product. So that's the big focus now. And the customer feedback continues to be that great technology is making a huge difference in terms of what the safety opportunity is and the autonomous driving opportunity is. And they're happy to see us continue to hit those milestones and de-risk things overall. I think in particular, the fact that we were able to hit series production and the SOP with Volvo sent some shockwaves throughout the industry that was quite positive. And when combined with the overall notion of, as we mentioned, some of the new safety regulations and the other kinds of tailwinds that are coming into play, that's really helping drive some of the feedback that we're getting, that it's also not just relevant for the ultimate autonomy use cases, but also the ADAS and safety use cases they want to plan for.
And Jesus, I think the early reactions from the Sentinel kits we've been shipping has been positive as well. Too early to kind of quantify any potential economic impact of that.
Gotcha. Thank you so much. And then if I can get one more in, do you have any update on your insurance business or any of those other things you announced during the Investor Day?
Making great progress there. I hope to talk about it more on our next call, but our goal is to start writing insurance policies by the end of this year.
Yeah.
Awesome. Thank you so much.
By the way, I realized for the content value question, it's what we shared before. It's on the order of about $1,000, for vehicles at the stage. So just at the initial stage, and then we hope to increase that over time.
Perfect. Thank you so much. Appreciate the time.
Our next question will come from Richard Shannon at Craig-Hallum.
Well, thanks guys for taking my question here. First one I want to touch on is the sensor economics. I'll hit my video here. Turn on. There we go. Sorry. On sensor economics here, you addressed this in the presentation. I did come late into the calls. I'm not sure of your prepared remarks there, but I want to get a sense of kind of the cost reductions you're hoping to come up with here over what time period. To what degree this is renegotiated materials costs versus other design effects. And then I assume this is on both Iris Plus and hopefully to help out on the next gen Halo product. But maybe you can give us some perspective on that. That'd be great, please.
Yeah, and look, while there are some differences between Iris Plus, and Halo, I think a lot of the success we're having now on bringing the Iris sensor costs down, that those will a lot of those will translate to Iris Plus as well as Halo. There is a lot of overlap in the product architecture as well as the supply base. But I would say, Richard, up until we reached Volvo SOP a few months ago, we've been, I would say, the vast majority of our engineering and industrialization resources have been focused on actually getting there. Now that we're there, though, that resource focus is shifting from proving we can produce these things to producing them in scale and then producing them in profitable scale. From a personal perspective, it's an area where I'm spending a lot of my time. And so part of what we need to improve our sensor economics is just getting the scale. And so, a lot of our contracts are volume based. And so as volume comes up, the costs will naturally come down. The other way that we're doing now that we have a lot more credibility because we actually reach series production and you see the pipeline, not only with our close to $4 billion order book, but the 20 vehicle lines that we're launching over the next few years, we're going and having more, I would say, thoughtful and strategic conversations with our partners in terms of how we can be more long-term related, and thus, bring the cost down sooner as a result. And so we're off to a very good start with that. I hope to give more precise timing on when we expect to turn the corner and kind of get to that positive sensor economics and positive gross margin. It will be next year. When precisely next year, I hope to, provide more clarity on that here in the near term.
Okay, fair enough. My follow-on question here is about the contract renegotiation here. Again, I missed the prepared remarks. I didn't see anything in the presentation, but wondering, characterizing who this might be. I guess I just want to make sure this wasn't someone who was an announced series production type of wind.
No, it's a non-series production customer, non-automotive customer. It's one of our larger customers. Basically what's happening there is this contract was sized a couple of years ago, assuming that we would be at a certain level of, I would say, scale. And as things are taking a little bit longer to get there, we kind of, need to kind of recalibrate it in the near term. So I would say it's just more of a recalibration than a renegotiation, but it could provide some revenue headwinds here over the next few quarters.
Okay, thanks for that clarification. That's all from you guys. Thank you.
I'd also mention just generally when it comes to the broader supply base, and going back to the original point, is that up until a few months ago, the reality is we didn't have a whole lot of credibility. A lot of these suppliers, small companies, big companies, have heard the story about people wanting to get to series production, people wanting to do this for years on end without really any successful global launch. And that's why I think showing that we can actually successfully do that we can meet the Volvo deliverables and be able to scale accordingly, has built a lot more credibility with us that enables us to get the right kinds of costed down long-term contracts that support, not just these current products, but also things going into the future. The core cost of what actually goes into the semiconductor components of what we deliver between the laser chip, the photodetector, and the processing ASIC that we have is under $100. It's really the question of how you can actually, now that we've gotten the core technology cost down, how we can actually get the rest of the more, commodity components, PCBs, mechanicals, and other kinds of things to that lower cost structure. And that's exactly one of the major things that we're focused on.
Okay, appreciate that perspective, Austin. Thank you. That's all for me.
Thanks, Richard.
Thanks, Richard. Our next question will come from Mark Delaney at Goldman Sachs.
Hey, Mark.
Thank you for taking my questions. Good afternoon. The order book, I believe, was over $3.8 billion at the end of last year. I'm hoping to better understand where you think that might be tracking to over the course of 2024. When you think about some of the opportunities you articulated, like the new automatic emergency braking regulations that I believe is generating some incremental interest from potential new customers, but also perhaps some of the headwinds you've spoken about today, such as the contract being renegotiated. Thank you.
Yeah, Mark, we update our order book at the end of each year, so no update on that. We remain confident that as we continue to execute and launch these 20 vehicle programs over there, we will recognize what we had at the end of the year, as well as continue to grow it with new business, both from new customers as well as existing customers. I think the exact timing of that growth and when the automakers make definitive decisions, that's a little bit outside of our control. So I don't want to speculate on when it's going to grow, but we are confident that it is going to grow.
And for what it's worth, for that specific, renegotiation topic, that was something that we already had heavily discounted in our order book. So it shouldn't materially affect that.
Okay, that's very helpful. Second question was trying to better contextualize the change in timing from when you expect to reach quarterly revenue in that mid 30 million level. You spoke about a couple of different factors, the slower production ramp ups, as well as this non-series production award and how you're shipping for that in the near to intermediate term. Can you help us to mention those? What are some of the bigger factors as we think about that?
Yeah, the primary driver is kind of when Volvo kind of gets to that, targeted production level for the EX90. They expect to get there with their South Carolina plant, what they said on their call, end of this year, maybe early next year, and then bringing up the China facility along that same time period. So when those things are accomplished, that's when we will get there. That's why we kind of taken the guidance from, hey, look, we don't want to rule out it's not going to happen this year, but given those factors outside of our control, it, it's probably going to be next year. And so that's going to be the biggest driver of it.
Thank you.
Great. Our next question is going to come from Kevin Garrigan at West Park Capital.
Hey, Kevin.
Yeah, thanks, Eileen. Hey, Austin. Hey, Tom. How's it going? Thanks for letting me ask a couple questions. So I guess just first, regarding the Volvo run rate delay, does this delay push out your timeline for overall company profitability at all?
No, no, it doesn't. In fact, while in the near term, it's not good for revenue, it actually kind of where we are on sensor economics today actually helps our net cash spend as well as our growth loss. So the more important thing is kind of Volvo getting to those, ultimate levels, which they're confident and we're confident they will.
Yep, got it. Okay, that makes sense. And as a follow-up, so I know you guys noted Volvo is expanding into China later this year. Are you guys anticipating any risk kind of given the U.S.-China tensions or any kind of retaliation from China with the U.S. looking to ban Chinese self-driving software? I'd just love to get your thoughts on how you view the China market.
Yeah, based upon everything we know about today, we don't anticipate any issues with, continuing to deliver to Volvo our commitments on the EX90. Longer term, this is a dynamic that we're monitoring, largely outside of our control. But, there's both pros and cons of that because, it could hinder our ability in China, but it also hinders some of the, Chinese Lidar's ability to compete in the US and other markets. And so, look, we're going to do what we can to serve our customers, both in the near and longer term. We're monitoring these embeds. We're thinking about alternatives to make sure that we can be a longer term competitor in all important markets to us, including China. And that's where we are today.
One other thing to add on that too is that not only are we the first and only company to have this kind of long-range LiDAR in the global production vehicle, in a standard, but also we're the only company in the industry that is able to build up both Western and Eastern world supply chains. And that's something that we've really done, first starting off in North America in partnership with Celestica in Monterrey, Mexico, but also in partnership with TPK in China. And that's where you can ultimately see over the longer term, as that stuff happens, is the product that we produce in China will really be for China. And then you have the rest of the world, coming from, for example, Mexico or, elsewhere as we expand. So that's something that really we were unique in being able to have these kinds of global scale wins, and in particular also wins in China to be able to deliver against. And that's despite, by the way, obviously there's kind of that inherent bias, but particularly around, domestic Chinese OEMs, there, but half the volume even within China is actually from global OEMs. So we still have a clear opportunity to be able to deliver against that. And that's exactly what we're doing and going to an earlier question for a previous analyst there, that's something that actually should help rapidly accelerate the volumes and ultimately our path to profitability as well.
Yep, got it. Okay, perfect. Thanks, guys.
Thanks, Kevin. Our final question is going to come from Kevin Cassidy at Rosenblatt.
Hey, Kevin.
Hi. Yeah, thanks for taking my question. I'm interested in the Halo product. That just seems like a real game changer for me. And you mentioned you're sampling it. Can you give us any details? How many samples and what level would you call it? Is it a beta product? Is it an alpha product? Or an emulation?
Yeah, I would say so. As it stands right now, we have some initial, I would say, proof of concepts around showing the performance capabilities, showing the system architecture, of it. What we're doing now is we're getting sort of the form factor equivalent samples to package it into, that kind of final dimensional package, which is, obviously one of the benefits of what we're getting in terms of that integration and integratability improvements from a smaller size. So yeah, it's moving along incredibly well. We're also able to develop it a heck of a lot more efficiently because of the big and technology platform investments that we made in the past that we're able to ride on the coattails of now. So that's also going to help really drive down development costs and other kinds of overhead over time as we do this. But everything's going as well as we could hope for in that dimension. And I think that that's really where for second half of the decade, or at least the latter half of that. That's where a ton of the automotive interest is in getting that, because that's the kind of product that can truly enable the scale that we want to achieve and know we can to enable that extreme success.
Kevin, if you're ever down in Orlando, you're welcome to stop by, and we can kind of have you swing by the the lab and kind of take a look at it, and you can touch and feel and kind of see real time what the team's been able to achieve, which is amazing.
Yeah, that sounds great. And I've got a good reason to go to Orlando then.
Yeah.
Thanks.
Absolutely.
Okay, thanks, Kevin. I think that closes it out with that. I'd like to thank everyone for joining our business update, and to the analysts who participated on this call. At this point, I'd normally give my closing statement of we look forward to seeing everyone next quarter. However, I will be going on maternity leave next month, so you won't see me. So the team looks forward to updating you next quarter, and I very much look forward to seeing everyone again in the new year. Thanks for joining us today.
Good luck, Aileen.
There we go. Fantastic. Another good call there from Luminar Technologies. Let me just close this out a moment. Not now. Bloody hell. Really? I've got to be reminded of this. That's annoying. Okay. Right. I'm just trying to get out of the call. Right. What we're going to do is this video will go out shortly as its own video. I hope you all tapped the like button and shared it. But I do have a special event now that I'm able to bring forward because the call ended ahead of schedule. So I've got this special event. So what the time now? Let's make it 05. So literally 4 minutes from now. Just bear with me as I make a little slight adjustment. I'm about to do that now, so I'll just change this. Bear with me. I've got a special event about to happen right now, and I hope you can all join me for a very passionate, very angry, very emotional video, which will save people, save everybody a lot of money, I believe anyway. See if you agree with me. So I'm just going to adjust the time because that ended a little bit quicker than I thought. So 2, 3, 4, 5. Gonna make 3 minutes there. 5 minutes past 5. There we go. We'll call it there. 5:05. Done. And 5:05. That'll be 5:30 then. So we're bringing that back. Right. There you go. 5:05, and that will be 5:30. So we're just making a slight adjustment there. 5:30. Okay, and I'll give you all the information now. There we go. That brings that back. That's great. We've managed to save a lot of time, which is always good. Time is everything. Okay, so this is what's about to happen. We've got 2 minutes. I hope you can all watch me live. How many people are with me right now? That's the extra channel. There we go. We've got still quite a good crowd watching us. Got this a video here. It's a premiere about to come out now. I'm going to give everyone the link to it. I think I've pinned it to the top, but I'm also going to give it to you there. I'm also going to give it to my Rumble audience as well who are watching me. It's a world premiere just about to come out. It's very, very passionate about, I've declared war today on financial YouTubers. This has got to come to an end. People consistently manipulating, creating thumbnails and titles to influence people to lose money. It's really quite disgusting. Well, they make millions laughing at you because they're selling videos. I go live every day and face the audience. This is really bad, but this is what's happening. This will explain it right now. And then to follow right after this, this video, it'll run for about 10 minutes. Please watch it all the way through. It gets very passionate. It'll then go into Elon Musk. I think Elon Musk needs to step down as the CEO. He's damaging Tesla's share. He's damaging the brand. He's going now, making all-out lies and nonsense about civil war breaking out in the UK and the government are protecting Muslims. It's all going a bit ridiculous. I've never seen anything like it. And the Tesla share price has been reflected in it. You can see it today. It's going down when other stocks are holding up now. I think this is really bad. As an investor, I would not be happy with Elon Musk standing as the CEO. Fine, he should be the chief engineer, but seriously, I don't think he should be standing as the CEO. It's a bad reflection on the business. He's got too much power on his social media, and he doesn't seem to care what he says. But anyway, that will follow that video. So anyway, here we go. This is what's about to start. I will leave you with this. This video will take you directly to that. It's about to go live in a couple of seconds. I'll clear the boards. There we go. You've all got the link. Hopefully you'll all join me. How many are still with me? Oh, we've still got everybody with me, which is wonderful. Thank you very much. And then it'll take you to Elon Musk, and then I'll see you live in the morning for the opening bell. Tomorrow is a very special day because we have opening and closing bell. We're doing some reviews tomorrow, plus Virgin Galactic earnings in the evening and IonQ earnings in the evening on the extra channel. So it's going to be very, very busy. We're just waiting any second now to give you the link for this, and then I will go. The moment that it starts counting down, which will be any second now, there it goes. There it goes. All right, that's it from me. Go and enjoy the premiere. Leave me your comments, thoughts below. There's also a poll to follow this as well here on X. You can see it. Look at that, 13 votes, 100%, 100%. So far that these YouTubers are only doing it for their own benefits. You can vote on this now and enjoy the video. See you back in the morning. Until next time, as always, take care of yourselves and each other.